Hello and welcome. Today we will be learning how to use the MarketWatch virtual stock exchange simulator. In doing so, we'll review how to buy a stock, how to sell it, how to place a market order and a limit order, how to place a stop order to limit our losses, how to place a limit order to realize our gain. So first, let's go over a quick review on what can I do if I think that the price of the financial asset is going up, is going to increase in value. So in this case, I simply buy it. And if I am correct in my expectation and the price actually goes up, I can profit from this. In this case, $20 profit. Of course, I want to buy an asset if I think that the price will go up. It wouldn't make any sense to buy something that you think that the price will go down. In financial markets, you can do the opposite. That is, in fact, if you think that the price will go down, you can do a short sell. That means that you can sell it at a higher price. And if your expectation is correct and the price goes down, you can actually profit from this. In this case, the same $20 in the position. Now, if you don't have the asset to begin with, if you think that the price will go down, but you don't own the asset, you can actually borrow it and eventually you have to give it back. That's what is called short selling. And how does short selling work? It's fairly simple. Assume you think that the stock of any company XYZ will go down in price. What you can do is you can borrow these shares from a dealer. In this case, let's assume that you borrow 1,000 shares of a XYZ company. And then you sell these shares short. That means that you think the price will go down in the future. Let's assume you sell them at 100 per share. And then you just have to wait and see if your expectation is met. That is, that the price will go down. So eventually, you need to give those shares back to the dealer. So let's assume in the first case that the price actually did go down to 80. And in the second case, we will assume that you were wrong in your expectation and the price actually went up to 110. So you have to return your shares to the dealer. And in the first case, let's assume that the price went down to 80. So actually you sold at 100, you bought back at 80. So actually you made a profit of 20 per share for a total handsome profit of $20,000. However, if you were wrong and the price went down instead of up, you sold at 100, but you have to give the shares back. So you buy them at 110. That's a market price at some point in time. And in this case, you have a loss of 10 per share. So your total loss in this case would be $10,000. These are gross amounts, since the dealer will probably charge you some interest and maybe some other fees for lending you the shares, but that's basically how a short selling works. We will see this in the simulator in a few minutes. Okay, so as you log into your game, you will see the game name here. In my case, just an example in which I'm the only participant in this case. You will see the main panel where you will see your name and the basic information on how much cash you have available. If your game administrator has allowed for margin buying, you will have some extra money here that you can use. Of course, remember that this is borrowed money, you have to give it back. If you have taken any short positions, as I explained in the introduction, you will have the amount here that you need to give back at some time. And also, if you have borrowed some money, you will see it here. Over here, you will see the gains for the day, the overall gains since the game started, and the return on those gains. Down here, you will see if you have more people playing in the game, you will see the ranking. It's organized by profit and loss. In this case, I don't have any because I'm the only one here. But if you have more participants, there's rankings here. Well, you can check who's winning. But in this case, again, I'm the only one here. so there's nothing to display here. But if you have more people playing the game, you will see the ranking here. And if your game administrator has allowed public portfolios, you will be able to see what other players have been buying and selling. So let's assume in here, let's go back to my portfolio, and I will do first a simple buy transaction. Let's assume that I want to buy Netflix. So I go into Netflix and I want to trade this share. And it asks me if you want to buy or sell short. In this case, I will start by buying 100 shares. In here, you can use the mouse here, this bar here, or you can just type in the amount of shares, whatever is easier for you. And in this case, I'm going to place a market order. That means, and in this case, as I'm doing this video, the market happens to be open at this time. So if I click submit, it's going to be executed almost immediately. In case the market is closed when you're doing this, you will see this as a pending order. So in this case, I will submit the order. I want to view my portfolio. So right there, I have it. I have 100 shares of Netflix in my portfolio. Now, let's assume that I want to buy, but I want to buy at a specific price. What we just did for Netflix was buying at the market price. So I'm not really sure when the order hits the market, what's the price I'm going to get. So I have execution certainty, but I have price uncertainty. That means that I'm not really sure what price I'm going to buy. Now, if you want to be setting a price, let's use Starbucks. I'm going to go into Starbucks. I'm going to trade it. I want to buy it. But in this case, let's assume that I want to buy 200 shares. But see the difference now. In this case, I would like to set up a price, but I want to set a limit. In this case, let's assume that I want to buy Starbucks only if the price gets to 80 or less. So I can also specify if I want this condition only for 1 day, or I want to keep it open until I cancel it. In this case, good till cancel means that this order is going to be open until either the price gets to 80 or I cancel the order manually. So again, what I'm doing is I want to buy 200 shares of Starbucks, but only if the price gets to 80 or less. So let's go ahead and place that order. And I want to view my portfolio. So now I need to go to my pending orders. And indeed, I will see Starbucks to buy 200 shares, but only if the price gets down to 80 or less. So this order is going to be kept as pending until I either cancel it or this condition is met. Okay, so the limit order will give you price certainty, but it will not give you execution certainty because you don't know and no one knows if the price will ever get to 80 or less. So this is the characteristic of a limit order. Now let's go back and now let's assume that I want to trade the Disney stock. But in this case, for some reason, I have the expectation that the price will go down. So in this case, let's do a short sell of this order of this company. Let's assume that I want to do also 100 shares. And I want to do this immediately at market price. So I'm going to go ahead and submit the order and go back to see my portfolio. So right there I have it. I have my previous order of 100 shares of Netflix. And now I have 100 shares shorted in the case of Disney. So now I have these two active orders, and I have my pending order, which is for Starbucks if and only if the price goes down to 80. Else it's going to be kept pending until I cancel it or the condition is met. So now let's assume that for the Netflix orders, as you can see, the price is somewhere around 290. Let's assume for whatever reason that you're worried that the price will go below $280. That let's say that you want to keep this position as long as Netflix price is above 280. So what can you do to protect this position in Netflix? So since you have 100 shares, let's assume that you want to sell these shares, these 100 shares, but only you will, in this case, we will use a stop order, only if the price gets below 280. So what you will do here is place somewhat of an insurance, somewhat of a stop order, in the sense that if you want to go away on a business trip or you want to take care of your daily activities and you don't have time to be sitting in front of the computer all day, you want to have the peace of mind that if the price goes below 280, these shares are going to be sold for you. If you want to say 285, whatever the number you want to use here, I'm going to use 280. So I'm going to go ahead and submit this order. So now if I go to my pending orders, right there I have it. So this means that I still have my Netflix shares right there. I have 100 of them. If the price goes up, great, I'm going to be earning a capital gain. But if the price happens to drop below 280, the simulator, the platform, is going to sell them for me. So I have the assurance that this protection, this stop order, is going to be executed if this condition is met. So I'm going to go ahead and cancel this order. Yes, I do. So now let's assume by the same token that I have Netflix, but in this case, I assume for any reason, I'm going to be satisfied if the price goes to 300. And in the same example, let's assume that you're going on a business trip, you're going to be away for the week, and you don't want to miss if the Netflix price goes to 300. You can actually place a limit order. In this case, you want to sell 100 shares of Netflix. But in this case, you're going to have a limit order in which 300 is going to be the triggering price. So again, how do I understand this? I'm placing a sell order for 100 shares of Netflix, but at limit. That means that it's going to be executed only if the price goes to 300 or higher. So I'm going to go ahead and submit this order. I'm going to go and view my portfolio. And I'm going to go and check my pending orders. And right there, I have it now. Netflix is going to be sold at a price of 300, the whole 100 shares of them, if and only if the price gets to this level. So what this is doing for you is assuring you you can realize your gains if the price goes up and you are away on your trip or in your daily activities, and you want to be sure that you realize this gain. Also, if I go back here to my panel, you will see that I have a short reserve. Since I shorted Disney shares, I eventually have to buy them back and return them. So this is just reminding me of that condition that I need to give those shares back. So in this short tutorial, we have learned how to sell a short stock, in this case Disney, how to buy a share that we did for Netflix. We saw how to place stop and limit orders right here. And that's basically it. That's basically the basic transactions on the MarketWatch Simulator. Thank you. I hope to see you again soon.